Hi, I'm here today with Dr. David Townsend. He is in Indiana here with me, and we both really love to invest. And today we're just going to be talking about investing. David, thank you so much for being here today.
Love, a pleasure.
So before we had started the video, you were asking me a question. We might as well just start right there.
Okay, that's fine. One of the things that we were talking about is the redistribution of wealth that is currently taking place in our country. Um, Towards the end of March, the Dow Jones had collapsed as a result of the announcement of the pandemic, which is a wonderful opportunity for investors to actually get into the market. But unfortunately, they did the opposite. Many people ran. If you consider the fact that if you had got into the market towards the end of March and looked at the return that it has provided in 4 or 5 short months, you would have more than doubled your money. And the question is, why do we fear the market when the time to get in the market is actually now?
Yeah, so I actually hadn't been investing for about 2 years. I hate to say
Mhm.
that, being I run an investing website, but
Right.
I've been out for 2 years. I had a objective feeling that it was overvalued, and I had a lot of investments in real estate, which did really well. I sold the majority of them last year, actually, but I had been out for so long, and then this hit, and I just ignored it. I was like, the market's probably going to rebound really quickly. Maybe it was my fault. I didn't take the pandemic as serious as I should have.
Hmm.
Uh, and as it went on, I was like, wow, this is really happening. And around March, I think the second circuit breaker hit. The first circuit breaker hit, and I really wanted to invest. I was like, "Ooh, wow, greed is starting to kick in my mind." But
Hmm.
I wait 2 weeks now. I just like wait. And 2 weeks later, there was like another circuit breaker hitting, and during that time, I was desperately trying to buy as much as I could. So I went all in on a few different stocks, mostly manufacturing.
Hmm.
I think I had two manufacturing stocks. I had Boeing. I bought Disney also. I think those are the majority of them. And then there was something called Wesco, which is a part manufacturer that I know of that I've been watching for a while, and they were very undervalued. Wesco was went nuts since then.
Hmm.
So I bought then, and as of about a month and a half ago, 2 months, I've been all out except for Tesla.
So, what were your thoughts around Disney and Boeing?
Uh, so I do a calculation. I do a valuation calculation that is very interesting because it looks 2 years out. It
Mhm.
tries to predict based on the past. What if your intrinsic value is this at this point in time? How did it perform 2 years later?
Right.
And I found from my analysis that there's statistically significant data showing that in 2 years, a stock will adjust to its intrinsic value, which is
Hmm.
nothing more complicated than just, its earnings plus its book value
Right.
discounted by interest rates and everything. But, that's how I do it. You can also use cash flow, but most stocks that are stable
Hmm.
will do that. And Disney was significantly undervalued from where I expected it to be.
Hmm.
Boeing was significantly undervalued. I mean, significantly undervalued. It was significantly overvalued at 400 in my calculations. Significantly overvalued.
Hmm.
Then when it fell to $100, it went way off the rails, and it
Right.
was way
Right.
undervalued. I think as of today is like 200, and I think that's like hitting the brink of being overvalued in my analysis.
Hmm.
So that was it. It was strictly a my choice to look at the stocks was strictly objective and just based on the data. My choice to actually make a purchase was that I took my emotions out and said this is the right time to do it based on my calculations. I need to wait 2 more weeks because fear is overtaking this market, and
Hmm.
I'm going to buy at the wrong time. I need to wait 2 more weeks because there's too much fear. It's not. It doesn't feel like the right time, and it wasn't. And 2 weeks later, during the next circuit breaker, I then started just buying. I was telling people, man, I told many people that this is either going to be it's going to look really good, and I'm going to be able to talk to people about it, or it's going to be a disaster. I'm going to have to wait 3 years for it to recover because there'll be a collapse in the economy. Luckily,
You know,
that didn't happen.
it's what's powerful is that you've mentioned two concepts. You spoke of something being overvalued. Many new investors may not be familiar with a concept that is assigned to these issues, overvalued. When you think of something being overvalued, what historical data are you utilizing in order to make that assessment? Because the market is moving at light speed, and we cannot get into the mistake of believing that historical factors can guide us. We are entering into uncharted territory, and to speak of a word that we hear often assigned to this pandemic is unprecedented. You hear that word all the time because it is so true. We are entering into areas that have never been explored before. What we do know is a lot of things that were coming up on some stock screens as being overvalued or undervalued was not adequately taking into account the pandemic. When you look at something like Disney that relies on crowds, it relies on people, the very thing that goes counter to social distancing and everything else. When you look at Boeing that is attached to the airline industry, one of the things that we know is that they were having problems before the pandemic. And so when you take all these factors into account, it's very, very difficult to really get a good assessment of what is the value when we know that the businesses are not going to be reporting earnings because earnings have been washed out as a result. But there are a lot of companies that are going to make more money during this pandemic than they've ever have before. There's so many companies that are hitting new 52-week highs. Extraordinary. I mean, something like Zoom is hyperbolic. I mean, so you can't really look at, old factors and old models of investing to describe or to make your decisions today. It is just, it's almost impossible.
Disney was an interesting calculation I made. So on paper, it looked undervalued. And I've made the mistake before where I looked only on paper.
Mm-hmm.
The extra thing I took into account was I knew that they were going to fall because of the theme parks closing. That it's not going to happen. Coincidentally, I went to Disney World just before the pandemic. It was scary. It was packed brim to the brim, and now it's empty in Disney World. But because they had just launched Disney Plus, maybe by accident, by coincidence, by luck, they had Disney Plus out there, and they have a lot of content, and people when they're stuck at home have to do something to pass the time. I made the guess. I said, okay, Disney's going to lose a bunch of money because of this, but they have Disney Plus, which is already growing, and this is probably going to solidify Disney Plus and get it going to the next level, which it didn't do as well as everyone expected, but it did better. They got a ton of people to join Disney Plus, and it offset. I think I heard like they actually made a profit last quarter, and they were shocked, or it was a surprise to analysts because of Disney Plus and all the content they were able to make money off of.
Mm-hmm.
So that was you're right. I couldn't just go by the past. I had to make sure that in terms of Boeing is essentially it is to fail. It's too big to fail. I hate to say that. I'm an aerospace manager originally, and Boeing, there's too much information of how to build airplanes in the Boeing Corporation. There's too much confidential information. There's too much. You can't let Boeing fail. And I've argued this with people because I'm very much a hard line capitalist, but I'm very realistic too that if you let Boeing fail and let all that data get out there, it's bad for America. Point blank. So I expected them to be taken care of. I don't even think they got bailed out, but they figured things out, and they're not in trouble as badly as they were. They're still in trouble though because the airplane market is collapsing. But yeah.
So if we are looking at Boeing, for example, and you're talking about the problems that were associated with the MAX 10, and the 730, all the issues that they were having long before the pandemic, one of the things that you concluded is that this institution is too big to fail. But in terms of investing, we want issuers that are going to make us money. We're not investing for, just because something is, has been long an institution. We want to make money. And so those organizations, those businesses that have figured it out is going to get the investor dollars. And this is what I'm talking about. All these institutions like, Disney and Boeing and Northrop Grumman and General Dynamics, they're having to rethink their business model. And so you have to be nimble in this market. You cannot be tied to allegiances by any means of or imagination. You have to be prepared to move because your primary focus is money. We're not here to lose it. We're here to earn it.
Exactly.
Yeah.
When I thought it was too big to fail, it was when it was at like maybe $95.
Yeah.
It had fallen from $400, and I made a decision. I was like, I don't think they're just going to let this thing keep falling. They're going to have to figure something out really quickly, and they did. But when it was at $300 to $400, I really didn't want to touch it. And when all those problems were happening with the planes, I was like, that's the symptom of a bigger problem. They're pushing too much out, and they're trying to expand. So everyone kept, everyone was saying, "Oh, look at Boeing's revenue growth and potential booked orders in the future." And as an aerospace manager, I'm looking at them like, man, it takes a lot to get an airplane done.
Right.
It's not like software, where you can put more people on it. Airplanes, you can only do so much. You can't throw more at it. There just comes to a point where you're bottlenecked until you add another production line, and that means another plant, and that's another 6 months. It's just there's lead times to get the growth. So I was afraid that it was just going too fast, and that's what happened. The problems with the Max airplane.
So your product is designed to inspire others to invest that would otherwise not invest. Is that what I understand?
Yeah, from a socioeconomic standpoint, if I don't really talk about this much, but I'm curious from your point of view what you think about it. If you go into Stockteamup or the Stockbossup app and you make a post, you can see how many people have seen it. So our top users, they'll get 2,000 to 3,000 views on a post right now, as of today. We, unlike Facebook and all these other social media platforms, we trend based on performance. And the idea is, this has been the idea for years, by the way, but now we're finally come to fruition. So I want to talk about it and get people's thoughts on it. We are essentially, people are giving us investment knowledge for impressions on their posts to be viewed for eyeballs. And it's a risk, but this is the innovation that we are trying to exploit to see if it will help more people invest. And when I mean a lot more people, I mean millions. I've always envisioned millions of people. Will it happen? I don't know yet. I'm very realistic about that too.
Okay.
But that's our model. Now that we've kind of got there, from your standpoint, what do you think about that?
Well, I think that for a lot of people, when you're talking about socioeconomic, there are many individuals that may be caught in a socioeconomic disadvantage that want to figure out a way to get in. And what captivates me about the program that you've put forth is that it's almost like it gives individuals an entrance into a higher order level of thinking that I can not only envision having access to what I need in order to participate in a market, but when you see how easily accessible it is, it doesn't take a rocket scientist to figure out that you can really change your life. You can really change your fortunes simply by aligning yourselves with individuals that are like-minded and are interested in moving their lives forward as well. There are too many examples in the marketplace that speaks to how we can get there. It goes beyond owning a pair of Nikes or Air Jordans to owning the stock. If you imagine people that are, dying in the streets for a pair of Jordans, what they could do to own the company, you could own that company just by purchasing a share.
Yeah.
You have more ownership, you have more possibilities to have that growth than you would in buying the sneakers.
Yeah.
We need to teach people how to access that. It's not about, it's not about you having to have millions of dollars in order to invest. I think that you demonstrate how easy it is to gain access. And that's the starting point, because in order to defy your socioeconomic conditions, you have to be firmly aware that it is possible. You have to begin to think that it's possible. And we look at institutions like Charles Schwab, Fidelity, TD Ameritrade are now all coming out with fractional shares. They see the value of owning just a piece of something can transform investing altogether. So it is very important that you get people engaged around the concept that they can change their financial trajectory.
Yeah. One of the niches that, why we believe we're a niche and we have a small moat right now, a small moat, it's very shallow, no alligators yet, but these brokerages, they want to get people in, but they don't. One thing that they're missing out is that people don't have the knowledge or the direction to make they have the information out there, but they don't have they don't have it within their system. So they're just saying, here's a tool you can invest, but if people make the wrong decisions, one thing I fear happens is they start to think of it as gambling. And it's a very real phenomenon, which I think is becoming less, but at the same time, it's getting more extreme as people get bigger opportunities. And what we're trying to do is say, okay, it's not a gambling system. If you follow people that are being consistent, if you can, you can follow people on Stockteamup, and follow what they're doing. They're making consistent returns, and you can make 20% a year, or you can shoot for the moon and try to make 100% a year, but you could also lose 50% that year. And it's up to you to decide what you want. But these brokerages can't direct people like that. They can give them to an investment advisor, but investment advisors really don't want to deal with 10,000 investors. They want to deal with 5 that have a lot of money. And our system, we really want to deal with 10,000 investors and have them help each other. And our little part of it is, if someone's being, for lack of a better word, a troll, we can our algorithms will put them to the side.
It disappeared. And that the brokerage companies can't do is they would rather deal with 5 clients that have $10 million than to deal with 10,000 people that got $50.
Yeah.
But they're training up the new generation of investors in so doing.
Yeah.
And small investors have access to multi-channels of information that is accessible to them by the big brokerage houses. But many of them are too novice to even know how to even use that information. So I just wish that there's definitely a place for organizations such as yours that has as a basis education. Education has to be the main primary component.
Yeah, and our big hope, we this is the risk of capital, of the capital market, right? This is the risk part of it. Our hope is people will learn more from each other. They'll our goal is only to say, okay, your grandma is giving you good information. Keep on following her. Your uncle isn't, just he's made some bad choices.
Yeah.
And that's all we're doing. But really, hear what other people are saying in your community. you all can see what's going on in the economy. We all go to McDonald's and see if their lines are filling up or if their service is bad, or if your car is breaking down. We have an idea of our economy, and we can use uh, those observations to help us with our investment decisions.
Absolutely.
Yeah.
Time horizon.
Yeah.
Time horizon is a very powerful thing when you begin to invest. You have to know, what is my time horizon for this money? Win, lose, or draw. I have you have to know what your tolerance for risk is, because we know that nothing goes up in a straight line. So you have to be comfortable with the volatility of the market. And that's, many people back in March said, oh no, I'm running from the market. There's no way that the market is going to have any returns for the foreseeable future because of this pandemic. And it was actually the opposite. That was the time to buy. Why do you want to buy when everything is overvalued, as you say? You want to buy low and sell high.
Yeah.
So this is why we see in the next couple of weeks, we may see a rotation out of stocks, because the prices have become very frothy. But this is when you sell. Why would you hold on with all these powerful gains?
Yeah.
You have to, you've got to be nimble. This market is demanding that you move and move quickly.
Yeah. The momentum in the market is very real. When I used to work at a hedge fund, we did momentum trading, and I was sold. It's a real phenomenon. Momentum's going to keep the market going. Winners keep winning, losers keep losing. That's a very real thing. In terms of timing, for us, we really have forced through nuanced things we've done in our site. You can't day trade on our site. That's a nuance. You can't. You only you have to hold a position for at least a day at a minimum. These are the nuances we've done to kind of signal to people you really should long-term invest. I really believe, and I'll keep saying it until I'm proven wrong. I think if you're a day trader and you're trying to have a normal job besides day trading, if you're not on that screen 8 hours a day minimum as your full-time job, you will get eaten alive. There are algorithms that I've made and these other hedge funds have made to eat you alive. And unless you are watching those charts for 6 to 8 hours a day, you're not going to be able to win as a day trader. You're going to lose. I really believe that. And if someone tells you otherwise, I want to see their portfolio. I want to see what they've done. I want to audit it. But a long-term investor really has an opportunity to win because the market goes in that direction already. And you can do your research at night after you've gone to work, after trading hours. You can inform your decisions and then make one decision for the next 6 months instead of 8 decisions in one day, which you can't do while you're working. So time horizons, if you're not looking for a 2-year stock, then you're probably not going to do too well as a long-term investor. Albeit with the coronavirus and everything going on, you might want to go down to 2 months, but still, you should be looking daily though. Daily, you're going to be brokenhearted by looking at the stock market daily. Yeah.
Unless you know for a fact what is your takeaway. One of the things that is very powerful with those people that have maintained a level of success with day trading is that they have an understanding of what their net takeaway is each day. If they make $2,000, they're out per day. And that's pretty significant and there's been many people that have successfully traded stocks like Tesla, which we talked about earlier, and have rode that up and bought it and held it and sold it, 10 times over because of their goal in order to get money. When you look at the return for something like Tesla over the last 4 trading sessions, it's been over 30%. Yeah. That is phenomenal. And it's going even higher today. I mean, this is unheard of, but there's a lot of stocks that can fall into a similar category like Tesla. But you have to be nimble. You have to be a purveyor of research and information, and you have to move quickly. So like you're saying, it's very difficult to manage a full-time job while at the same time trying to day trade.
Yeah.
You can't do it. I mean, if you miss one headline that impacts the market, you could be creamed. I mean, so you are right about that assessment. You have to, this is something that you really have to give your full attention to. And some people just, for some reason or another, are not that interested. I mean, so that's one of the reasons why I'm really excited about what you guys are doing, is that you're going to engage people's excitement around the concept of investing, making it not like your old father's Wall Street Journal, looking at, into something sexy. So with the partnerships that you guys got with all of these rap artists and this and that, is returning it to a place where it can be, making money is sexy. I mean, I don't know about what you feel about it, but that really gets people start doing what they're making money.
That's our headline for this video.
Yeah,
investing is sexy.
That's right. It is, because it is. Wouldn't you agree?
Yeah, I agree. It is.
Okay. In your most conservative way, the Sunday school teacher says, "I agree." But it is. I mean, we want to make money, and this is the time to make it. Yeah. Never before have we been given such an opportunity.
Yeah.
To make money, and I like making money.
Yeah, I want to say one thing about the joining with Rap Snacks and having rap artists talking about our site. When I was told about the opportunity, I was very disinterested. I just like, man, I don't know. I think what we're trying to do is a long-term thing. If they're looking for just like a quick little thing that it's cool, I'm not interested. But after talking to them, and especially Seth going to meet them, he met them in Pennsylvania, and he came back to me and he said, these guys, Master P specifically said, you should spend an hour learning about financials instead of playing basketball for an hour. And he almost joined the NBA. And he's dead serious. He's very passionate about getting people to learn how to invest. And that's what we're doing. I mean, we need people to invest. we're not looking for, upper income people to invest, use our site. We don't want investor advisors to use our site. We want everyone to use our site and get everyone to invest. I think everyone has to. I believe it's so important that it's as important as voting for a president or whatever. I think it's even more important because these companies own resources, and they're using these resources for things you may not believe in, or exploiting people that you may not believe in. So your it's socio and economic impacts that occur, and you can, when owning these companies, you can say, I don't want you guys doing this. I vote that idea down. Don't exploit that. Don't exploit this. Or if you want to just be greed, then say, hey, I need more money. Be more efficient. Mm-hmm. It doesn't matter what you believe in, but you should have your voice in these companies. That's why I believe everyone should invest, hands down.
I think there's something very fascinating about ownership. There's something, innately powerful about saying that I own Tiffany. I own Tiffany. And guess what? Because I own Tiffany, they're inviting me to 575 Park Avenue for their annual shareholders meeting. I mean, that's major. A little kid from the east side of Indianapolis going to an annual shareholders meeting with the CEOs and all these celebrities and all these famous people. I get to come in. I have my admissions ticket, and I have a share and a say into how we're going to orchestrate this organization. I think that that's what Master P's enthusiasm is, because I think that he knows a lot of people, a lot of young kids that have access to money, however they get it. Many people, there's certain things that are associated with when you say rap artists. You think of money, ill-gotten gains, or whatever else. The bottom line is they've got money. Let's put that money to good use, to do good things, to return good things to our communities. That's power. Power is not giving people a box of chicken. Power is giving people the ability to own young brands where we can say that we own KFC, we own Taco Bell. That's what ownership is, where it's at.
Yeah.
When we look at successful investors like Warren Buffett, that's what fascinates him, is the ownership. He didn't want to borrow, he wanted to own, and that's powerful. And we can teach our kids and anyone else that lesson that wants to climb out economically from the despair that they may be in. This is the greatest time to be alive in America. If we could survive COVID, but we got to be able to survive COVID, because otherwise, it's all for naught, right?
Yeah, I'm with you, and I'm doing, we're doing whatever we can to get that. And our little piece of it, we're not going to solve the whole issue, but our little piece of it is just, we don't want someone to go onto Facebook, get some information, be lied to by someone that does no incentive to tell you something useful. Right. Take that pick and just get burned by it, and then never want to invest again. Our little innovation is just, this is bad. These are people that are making bad ideas. These are people that have good ideas. Take a look at these posts. You don't even have to even invest in them, but just look at these. That we're just vetting people. Our social network has that unique opportunity because there really is a way. There is a goal. You're trying to make more money, so might as well just increase the posts of the people that are making money, so that they can help other people. And that's it. We just want to really just remove the misinformation, so that people have confidence in taking a chance and investing. And once they do that, then they can take off on their own.
That to me is the goal.
Yeah,
that's the goal right there. If we can get them open and receptive to the idea of investing something that there is a possibility of return, that's powerful. I mean, that is what we mean by having your money make money. Your money should be able to make money. And there's nothing more powerful than investing in order to achieve that.
Yeah, absolutely.
You don't want to do everything, but whatever that piece is, make it so phenomenal that other pieces can come together to conjoin to make it a whole piece. Yeah. I mean, define what your piece is and slay that. I mean, let that be the thing that you shut down, okay? But I think that posting and information, it's transmission of information, and it can be very, very powerful. It can be we already know it's a powerful medium, but let's make some money from it. We just don't want to just have successful posts that doesn't translate into making money. You know what I'm saying? Because otherwise, there's no value.
Yeah.
But I want to get. So, what's your hidden secret today? What's the stock tip? You have a stock tip today?
I've already said mine, man. I said Tesla, and that's not even Amazon? A secret.
What about Amazon? You can't be afraid of Amazon.
I've failed with Amazon. I've only made like maybe 15% on it. I've always been scared of Amazon. I thought I'm a Google guy. Yeah.
You can't be afraid.
Yeah.
You have to know. See, and that's the thing. Fear is, you cannot know. Do you not know that Lord & Taylor, which is the iconic brand of high fashion in New York City, do you not know that they filed bankruptcy?
I think
Lord & Taylor filed bankruptcy.
I've heard of that, yeah.
And then in less than 3 weeks, Jeff Bezos wrote a check for the building at Lord & Taylor.
Wow.
That is going to be a new distribution center for Amazon. I'm telling you, don't be afraid of Amazon. He is making all the right moves, okay? He is making, people are afraid of, it's $3,000 a share. So it's, who cares? If it's returning the money, we may have to sell the house, the car, whatever we got to do in order to get the money. You see what I'm saying?
Yeah.
My money is on Jeff Bezos and Elon Musk. I mean, that's just it.
Absolutely. Well, I saw that there was one question, so I'll read it to you. It's from Linda Clemens.
Linda Clemens. Yeah, Linda.
Dr. Townsend, what are the 3 strategies that Americans can do to get in the game, yet focusing on their basic needs of survival?
Okay, that's a good one. Can you read that again? Because that's a multi-layered question.
Sure.
What are the 3 things?
What are the 3 strategies that Americans can do to get in the game, yet still focusing on their basic needs of survival.
Okay. So our basic needs of survival, the three things is to assess. We can't move forward without assessing our situation. We have to know and understand what are our basic needs for survival. So we have to know that going into, before we even venture into the area of investing, we've got to make sure that we're investing with dollars that we can afford to invest. So we would have to be able to assess what are our basic needs, what are those requirements, and having a belief system in yourself to know that in order to get more, I have to give more. So you have to figure out, is there ways that I can reduce some of my basic need requirements in an effort to place more in my area of investment? What I mean by that is there some way that I can, mitigate some of my basic living expenses that will free up or enable me to do more in the way of investing? Because investing is going to be the key. And she said that she needed three strategies. So one is to assess, and that the second piece is to evaluate, and then the third piece is to deploy. It doesn't do us any good to assess and understand and evaluate without actually deploying or having a strategy for deploying upon that assessment. So we have to be able to assess where we are, know where we need to go, and do we have a desire to go? Because many people during this time are thinking about nothing more than just day-to-day survival, which in many ways is very limiting. We have to know and understand that if tomorrow comes, and it will, we have to be prepared for whatever it brings us.
Yeah.
I don't know if she can get the three strategies out of that, but I mean, she's probably got more than three strategies. I gave her 6 strategies.
Yeah.
That's enough. But yeah, it's a good thought though. I mean, because I think what the essence of the question is how can I invest for the future if I'm worried about my basic expenses and my basic living and survival today?
Yeah.
Perhaps.
It's a tough question. I'll say on my part, we're trying to solve one part of that, which is you've now made it, you're saving, and if you can make more than you're spending, let's say $25, you can start investing, and what I'm just trying to avoid is people taking that leap that they finally get there, because that's a big struggle for people. I know I did not grow up with, I grew up in a household that struggled with money and bankruptcies. So I know that it's not easy. I understand the suffering that can occur indirectly through my parents. I've been fortunate myself, mostly because I've been afraid of a little bit of fear, but afraid of that. What can happen if you don't try to save more money than you spend. But once you get to that point, I just want people to take a chance, make an investment, and then it fails because they got the wrong information. They need information about safe, easy things to invest in, and once they start making that nest egg, go into more risky stuff. But there's a lot of easy stocks to get into, utilities, a lot of different things. But yeah, it's the answer to get to that point of investing. That's a hard one. That one is probably not solvable between us two right now, but we understand that it's not easy though.
So when did you sell with this sell-off? When did you sell? Did you sell after March or was?
I sold like a month and a half ago. So what is that? June, July?
That's not
yeah.
bad.
I just,
You can't handle it.
I should have done the same thing though. I should have said, okay, it's overvalued. I need to wait 2 more months.
Oh, yeah. It's overvalued, but one of the things that you realize, because we're hearing a lot in terms of the media about how is it possible that we are in the middle of a pandemic and the stock market is reaching new highs every day? That there's a disconnect between Wall Street and Main Street. There's a disconnect. There's a huge disconnect, is what they're saying. How is it possible that the stock market is realizing these record gains amidst all of this despair and suffering on Main Street? Well, it's quite clear.
Yeah.
Money doesn't know anything about COVID. They don't have any idea about a whole COVID has got us down. Money has to seek money, and it'll devise a way. We're seeing that now. And so if you're on the other side of the equation, meaning that you're an investor, it's not saying that you're protected from all of the ills that are associated with the pandemic, but there's an ebb and a flow with this. You want to be with the flow, not the ebb. So,
Yeah.
I mean, it's a tough space. It's a tough time that we're in, but tough times never last, but tough people always do. So you have to really figure out, I'm going to be the tough one.
Yeah. In terms of the nuances of what's going on right now, I could be completely wrong, by the way. The market could keep on going up for 2 years, and I'm way underestimating how much growth is about to happen. But I see a few things going on. The one thing I've read is that tech stocks are really pushing the whole indexes up. So there's a disconnect there, while more conventional stocks might be lagging. And if we had just looked at those stocks, then the market might be where it really needs to be at. The other thing is, we're still quantitatively easing. We reduced interest rates, so there's money flooding our system. And if inflation starts to really occur soon, we're in trouble. I would then feel more confident saying that, man, we're about to hit something bad. But right now, inflation's staying steady with even this influx of money coming in, and that money has to go somewhere. So it's going into stocks and things, and keep leaving, not going into the normal economy, which would then increase normal prices. I think those are two things that I've noticed that, of why things are going the way they are. And fundamentally, investors are making a bet that COVID is going to end soon. That's it. That's a basic bet people are making, and they could all be wrong. There could be an answer. Why is the market going up while COVID is still happening? Because investors are wrong. That's an easy solution. Malcolm Razor's. That could be the easiest solution there is. Linda says, there are businesses that not only survive, they thrive during a pandemic. Clorox has been a staple. Look at the market. They can't keep Dr. Pepper on the shelf. Economic futurists predict over a decade ago that online medical advice would be forthcoming. We have to look at history as it always seems to repeat itself. Yeah.
That's powerful.
That's just a good thought. Thank you for that.
We couldn't say it any better, could we?
Yeah. Ironically, I did find out that Dr. Pepper was out of stock just yesterday.
Are you serious?
We were able to get some, though.
It to be out of stock?
I don't know. I think it's the cans. I heard 2 months ago that on NPR actually that the aluminum cans were starting to be sparse because I think the aluminum is made in China and it was being delayed. Yeah. Okay. I don't think it's the actual soda. I think it's the cans themselves that are.
The cans itself. Okay.
Yeah.
But you're right about the market. When you look at the tech, like Apple, Microsoft, Facebook, they're weighted in the index. So as they rise, they pull all boats with them.
Yep.
And that's some of the danger, because some of these stocks of these indices are rising without fundamentals.
Yep.
And what will happen is if Apple, Microsoft, Facebook get hit, then they take the whole market down with them. So that's what I'm saying, is that a lot of the algorithms that are out there are way outdated. I mean, they can't even keep up with the phenomena that is existing. So that's another thing that's kind of scary. I mean, we are learning something new every day, literally.
Yeah.
Literally.
And you have to be careful what you read, because this comes back to everything I'm doing, right? You can't really trust what you're reading, but I've read that supposedly Warren Buffett's been going quietly into gold. I definitely need to look deeper into that. So don't quote me on that. Is that true?
In his 13F filing on yesterday, it showed that he trimmed all positions in airlines and he's buying gold, which shook the market yesterday because as history, Warren Buffett has long said that gold is an underperforming asset.
Yeah.
So why in the world would he be buying gold now? And he's one of the world's greatest investors that ever lived. So as Warren does, so does the market. So you had a lot of ETFs on yesterday that was rising in tandem with that news.
Yeah.
Barrick Gold, for instance, soared. You know, many people are taking positions in gold. I mean, he's unloading J.P. Morgan. He's unloading Goldman Sachs. And as a result, when he moves, the market moves with him.
Yeah. Yeah. He's definitely ruining the party. That's for sure.
Well, I mean, if you own Berkshire Hathaway, you're okay. Actually, Berkshire Hathaway stock has not been doing well at all.
Yeah.
And that's because of a lot of the airline concentration that he had. They reported their first loss in I don't know how many years. They've never had losses, but you know, this is a new time for us. And it's time to get position and not fear. That's the one thing we can't be afraid. Not in this time. No.
I'll tell you my calculation that I talked about earlier about looking at future returns 2 years in the future based on current intrinsic value. It doesn't work for Berkshire Hathaway, which you would assume would be like the perfect stock this would work on.
Mm-hmm.
My only guess on why is because there's so much exuberance around his stock that it will naturally overvalue because
right. Exactly.
It's
That's
usually higher
analogy.
than where it should be. Yeah.
Absolutely. Yeah. That is a perfect analogy.
Yeah. So you can't even trust Berkshire Hathaway, which is like the fundamental value stock.
The only thing I'm trusting is Elon Musk. If Elon Musk say whatever he says is where I'm going with, I don't care what it is. I mean, the man just cannot. You know, he's an enigma. I mean, never before have we ever seen anything quite like him.
I had a different interview with a gentleman named Ryan Henry. He actually runs Open in Indiana. Great guy. Just love talking to him. And he asked me, is it a good idea for leaders, especially CEOs, to talk about stuff on Twitter that might be, inappropriate or whatever? And I just said, specifically Elon Musk, who does that, he knows what he's doing. He's intentionally saying these crazy things to get your attention, and it works because we're talking about it. He's intentionally doing it. So we can talk about Teslas. We talk to someone else about Teslas. And one of those people that we talk to buys a Tesla. He's doing all of that just to get your attention.
He's getting it. He's getting it for sure.
So everything he does, I don't think is an accident. I really don't.
He's very intentional.
Yeah.
He doesn't just do something.
Yeah.
He's intentional. There was a lot of short sellers that lost the farm betting against him.
Yeah.
That saw financial ruin that was betting against him.
Yeah.
It's just not a good idea.
Yep. The thing that got me to really look at Tesla again, believe it or not, was actually the story that came out a few months ago about him sleeping underneath the desk at Tesla. Have you heard of this story?
One of the facilities, yeah.
Yeah.
He doesn't sleep.
Yeah.
And he took refuge under one of the desks in one of the either manufacturing facilities or their office where he slept.
Yeah.
Can you believe it? Yeah, that's somebody that is on a mission. And this man is worth tens of billions of dollars.
Yeah.
He's hungry. He's hungry.
That was a story that, I thought, okay,
really
I need to. You? I'm sorry, what?
Did it touch you? Is that what it was? Did it really move you?
Oh, yeah. Any company that I've been in that's been successful, people are there late. People realize that they need to get stuff done. And there is that, a little bit more intensity in companies that I've been in that are successful. The ones that aren't successful, they're gone by 4.
Yeah.
They're
out of there.
Yeah, those have failed. I can tell. I could tell from I was in 3 different aerospace companies. I could tell which ones were going to be successful and not by the intensity. And yeah.
Ooh. Okay.
Well, Dr. David, thank you so much.
Oh, you're welcome
for joining me today. I really appreciate it.
You're welcome.